I'm going to start making these videos today about these people online who think they know everything, and they clearly don't. And the truth will come out eventually, but I'm just going to make these videos and leave them as tokens to remind you that they were wrong. So we're going to debunk hype artists. This is episode 1, and it involves collateral haircuts. Now, the hype claimist in this video he calls himself the Butcher of Wall Street, but I call him the Butcher of everything common sense. He claims new DTC collateral haircuts start Monday, May 2nd, 2022. That equals margin calls. Doesn't give any reason why, just says that's why. Because again, he's doing this for views and attention because likely unemployed, doesn't have anything to offer society other than making false claims that he knows his viewers won't look into. Now, GameStop and AMC price since this post, they're both down 4%, GME 4.8%. I'm sorry, GME 4.0%, AMC 4.86. He also goes to say, if you're in AMC, GME, BBIG, BBBY, or other meme stocks, you need to share this damn video. So again, he's playing with the narrative of them being meme stocks, which I thought that wasn't a thing. But yeah, let's go and see where he's wrong here. So it's clear his intentions are views and attention. He wants you to share it with everyone despite not getting any evidence of it meaning anything remotely to what he's saying. He puts stock market crash 2022, which he had at 2021 and then changed it for some reason. And now we're going to look into what collateral haircuts really are. This is a document, cited work. This is Pricing Repo, a model of haircuts and rates. This was written on February 8th, 2021. In the opening text, it states, we study the effect of the quality of collateral on repo rates and haircuts. We built a model of repo based on differences in beliefs where at-value risk and expected shortfall arise indigenously as sufficient statistics of the quality of collateral, i.e. its return distribution. Although a higher expected shortfall increases both haircuts and repo rates, a higher value at risk leads to a larger haircut and a lower repo rate. We show that while riskier borrowers face higher haircuts, they do not necessarily pay higher rates. More profitable borrowers borrow more against the same collateral at a cost of paying higher rates. And then down here it says, unlike unsecured debt, a repo has not only a price condition, which is an interest rate, but also a non-price condition that measures the degree of collateralization, which is called a haircut. In other words, that is the amount by which the value of the collateral exceeds. So all a haircut is over collateralization. Thus, when VAR increases, which is another document that Bossblunts didn't read, the lender requires more collateral to maintain the same default probability and the haircut increases. With more collateral, the loss given default decreases. Since the probability of default is the same, but the loss given default is lower, the repo deal is less risky, and the lender decreases the repo rate. Now, again, if he would read anything and stop just trying to hype MOAS, he would know that an intraday VAR charge was just established on the 19th of last month, which fits into the haircut changes because they had a VAR charge established, which is half of the equation. Now, collateral haircut increase equals more collateral. More collateral equals decreases loss given default, and overall it makes repo deal less risky. Nowhere in here does it say MOAS or margin calls. Now, super note number 2 here from the DTCC's own important notice says DTC may reduce its risk by assigning higher haircuts. So all of those 100% haircuts that you saw him jacking your tits about in his live stream where nothing of fact was ever spoken, he has it ass backwards because he doesn't know what he's talking about. Now, where is he wrong exactly? Number 1, collateral haircuts were increased for certain securities, which decreases the chances of margin calls and overall risk from the DTCC. He just pretends it's bullish to get his followers hyped up and thinking about MOAS, which, again, is a term coined by NASDAQ in 2013. He needs the views. Number 3, as we just learned, the highly volatile and risky assets would be the ones receiving haircut raises, which is not meme stocks. Meme stocks are considered riskless principal orders. You know why? Because retail is uneducated. They follow people like this. They cycle misinformation around until everyone believes it, and everyone that's on the outside is a shill. It's the definition of virtue signaling. And what's funny is that Rule 107C, Retail Liquidity Program, you are providing liquidity to the market because you don't take the time to read the reality of these situations. You listen to people like him with no prior experience, no inkling of intellectual honesty, and no insight to anything regarding the current financial markets. Now, what do we all know that we've seen every day that exists? A repo, a extremely historically high repo that is about to start unwinding as per the FOMC meeting, as per the rate hikes, as per everything else that's been happening in the last 6 to 8 months. So, why did they increase haircuts? The haircuts mean nothing other than they want a less risky repo operation when they begin to unwind their positions, which they use haircuts combined with the VAR charge discussed earlier to calculate that risk, which will be lower for the securities they increased the haircuts on. So as you can see, proven by this inarguable documentation, he is wrong. He's been wrong about everything. He's not the only one. There's a lot more of them. This is the reason why. It's Dunning-Kruger effect 100%. This is Bossblunts. He got up to the top with his viewers on YouTube, and he stayed right here. He never put this slope, he never put in the work to learn anything. That's why he's here. That's me right here, calling him a fool. Because he claims, look around, behold, my masterpiece, that he doesn't even understand. And then that's me over here, knowing that he doesn't know anything and that he's a fool. This is 100% the entire problem with social media. People scale their accounts too quickly, and then they feel like they don't have to put the work in to know what they're talking about. And that is what Bossblunts is. He's just a product of Dunning-Kruger. So, that's basically the end of it. Collateral haircuts mean nothing from OS. The prices are down since then. And it is what it is. You can cry if you want. You can complain. But just don't forget to unlike and unsubscribe. That way you'll stay in the dark.